I am going to have to start over because I have no audio. My apologies, folks. So I'm going to start from the beginning of this. So I wish this was taped, because I can basically just click it and do that. So my apologies. So let's start over, folks. Okay, so in today's discussion, we're going to talk about ETFs and how you can invest in them and basically what they are. So what we're talking about today is I have so many people that watch my channel every day and they reach out to me and they're like, Dan, I'd love to buy a house, but I'm just broke. I don't know where to put my money, how to put my money. I see the NASDAQ and all these stock market things are rallying every day to record highs. How can I participate? So what we're going to talk about today is just take a basically a look down view over everything, and the most prudent and efficient way for a first time person who's never invested, really doesn't know anything about it, how they should do it. Now, first off, I wanted to explain to you guys, I'm a mortgage guy. Okay, I do mortgages for a living. Check out the Rate Update website. Check out my YouTube videos. I'm doing this. I have a degree in economics. I have a portfolio that I can't handle myself, and then I have two other companies handling others for me. But I do a lot of trading, and I actually moved to Chicago to get down on the board of trade. But then I ended up doing mortgages for a living, and I've done it now for 35 years. So I want to use my knowledge to help you guys. I don't want you to buy this stuff. I don't want you to, take all of the information I give you as just an educational tool. I'm going to show you, think of topics or areas that you'd like to invest, and then how do we really take that information and then figure out what's the best way to invest in this. So in today's video, what we're going to talk about are the ways that I feel the beginning investor should invest. You shouldn't really buy an individual stock because if that stock goes down or something happens, you're just allocated in that one stock. You want to buy a broad basket of stocks. So what we're going to talk about today is ETFs. Okay, what is it? What are they? How do you research things and so forth? I use Chat GPT a ton. And if you watch my mortgage channel, it helps me with my titles. It is terrible at thumbnails, but it helps me on a lot of topics as well. But it really helps you in investments. And I'm going to show you here. So let's go to Yahoo Finance. This is where I want you guys to be. YahooFinance.com. All right, you can see here another caption. NASDAQ aims for record with big tech bonanza on deck. So everybody wants the big tech stocks. So I'm going to show you today on which maybe ETF you should buy. Okay, so let's get to here. What is an ETF? Well, let's bring this up on the screen. An ETF is this. It's a way to diversify, provides exposure in a broad range of assets, reducing the risk compared to buying an individual stock. Okay, so it's a mutual fund, kind of, but it's more liquid than a mutual fund. So here's where the liquidity comes in. And this is why I own ETFs versus mutual funds. They can be bought and sold through the trading markets throughout the day, all day long. So it trades like a stock. With a mutual fund, what happens is they have to balance their fund at the end of the day. And then once they balance their fund, then you can put in a sell order or whatever. But you can't do any transactions basically until the end of the day. Okay. So with an ETF, it's tradable just like a stock. Cost effective, often have very low expense factors, okay, other than mutual funds. Mutual funds a lot of times have expense factors because they have people behind the scenes managing the whole thing. An ETF basically just takes it, buys a basket of stocks, and lets it run. Transparency. Holdings are usually disclosed daily. So it'll tell you who they own, and what they're doing for the day. And I'm going to show you how all this works. Types of ETFs, you can have a whole broad range of them. You can have individual stocks, or not individual stocks. You can have a stock portfolio of ETFs. You can have a bond portfolio. You can have a sector portfolio like we're going to talk about today. We're going to talk today about the technology sector. Okay, so here's what I did. Okay, so let's assume we want to be in IT. All right, so I'm going to Chat GPT. Well, here's what are the Magnificent 7 stocks and how can I invest in them? I'm suggesting an ETF. Okay, so and it's going to give you a list of companies. These are the companies in the Magnificent 7. You probably hear it every day: Meta, Amazon, Apple, Alphabet, NVIDIA, Tesla, and Microsoft. It kind of gets old after a while. But let's go to Chat GPT. Here's what I put in. And you can see it right on the screen. Top 10 financial ETFs all hold the Mag 7. Sorry, I got to put my glasses on. And then rank them on year-to-date earning returns and also expense factors. So it does all the hard lifting for you. Okay, so it's going to go down through here and it's going to give us 4 of them. It says Round Hill Magnificent 7, The Invesco QQQ, you might see on these on a lot of sports things, and I think the Super Bowl had them on there as well. The Spider S&P 500, that holds the top 500 companies in the U.S., and the Vanguard VUG, primarily large cap growth focuses. VUG includes all the Mag 7. Okay, so then I went down through and said this. Okay, compare SPY and VUG, and what would be the best choice for an investor and why. And the reason why I picked those is the returns are good. I now want to find one with a low expense ratio. So you have MAGs with a 0.29 expense ratio. You have the QQQ at 0.2. You have the Spider at 0.09, and you have VUG at 0.04. So now I'm going to say, okay, these are the two factor ones I want. Now compare these, analyze them for me, and tell me what might be best for my situation. So it puts it in right here. Compare SPY and VUG, and what ones would be best choices for an investor and why. Okay, so it also computes out your risk threshold. Okay, holdings and sector exposed. So the SPY tracks the entire S&P 500. All right through here, and it gives you some terminology on that. Then the VUG focuses solely on U.S. large caps, heavily weighted toward growth sector like consumer discretionary, but it holds the Mag 7. So I'm like, okay, their returns are pretty good. So now let's break it down. Expense ratios, year-to-date performance, dividend yields. And then I said down here, the best choice for investors, they came out through here. For risk-tolerant investors, the VUG is a strong choice, particularly for those who believe in long-term growth. If you want the Spider, maybe more suitable as it provides a stable and diversified portfolio across all sectors. And then it kind of breaks it down. So I use this to basically analyze and break things down for me. And then what I do is I go over to here, Yahoo Finance. Okay, so if you guys have any questions, please bring them up. I'm going to try to not in this session do too much. I just want to basically introduce this stuff to you. And every week, I'm going to have you do some homework and come back, and then maybe a couple weeks from now, we'll start asking questions. You can give some recommendations on what you think, and we can here as a group analyze it and see how it does. So let's go over to here. So I created a portfolio not too long ago. It was about a month and a half ago, and I just started plugging in things because the whole point I wanted to teach you guys on how to do this. Okay, so the Chat GPT suggested that we use VUG as our portfolio outlet. Okay, or our ETF to use. So I'm going to go over to VUG, and I'm going to show you this now in Yahoo Finance. So hopefully you guys are Yahoo Finance with me, and you can plug in this ticker symbol. Just at the top, put in VUG. It usually there's all kind of sections through here that'll give it to you. So you can plug it in there, VUG, but you'll find it. Okay, so here's what you see when you go to the Yahoo Finance piece of this, and it's going to give you a ton of information over here. The nice thing about ETFs is you really don't need to look in PE ratios and a lot of other things because you're diversified with a whole bunch of stocks. Okay, so let's break this down. Right through here, if you go to the first screen, you're going to see this. Let's see, what has it done so far year to date? So it's going to give you some year to date figures. That number, this fund right now so far this year alone, 2024, is up 27%. Okay, so now can you see how the rich get richer? Okay, this is a perfect example. Then you start going down through here, and it's going to give you some data here. And a lot of this is important, but most people don't look at a lot of these things. But let's just break it down so you understand. The previous close. What price did it close at the previous closing? So it gives you this number, 393.12. You're going to go 390, what is it? 392, 393.12, 397. So it's up $3 today. It's doing fantastic. Okay, that's today. Opening, 393. Previous close, 393. So you can see those are pretty much right on target. Then you have the bid and ask. Okay, this is telling you what people are bidding to buy the prices for, and what people are wanting to sell for. So you have bid and asks, and what the markets do is they just balance all this out. They always find a buyer for a seller. It's just kind of like housing. You need to find that house, and then you and the seller have to compromise on a price. That's basically what the exchanges do on our behalf. Then you have a 52-week range. That range was 364 to 397. Where do we sit right now? 397. So it's at an all-time high right now. Volume, 1.6 million. Average volume's 972. Well, it's almost at the closing of the day, but it still has almost double the volume. So there's an activity in this platform right now. Okay, so it's telling you it's in demand. Net assets, 261, I think that's $1 billion. Yep. and so forth. PE ratio. Now, what this tells you is what the price of the stock is versus its earnings. So they take the stock price divided by the earnings and give a number. Usually, this number is about in the teen range, and maybe in the 20 range. This is a pretty expensive. This is telling us the stocks in this portfolio are pretty expensive, and we know that Nvidia's up what 2,500% in the last 4 years, but it's the projections on where it's going to go. Okay, so that's why people invest. The yield on it is 0.81. Year-to-date daily rate of return, almost about 27%. So if you invested in this ETF at the beginning of the year, you'd be up about 27% at this time right now. So that's that part of it. Then again, we're in Yahoo Finance. Go to news, and news is going to pull up all the data on any stocks that are in the Vanguard Growth Index Fund. So how to play tech, big inflow from SPY. Oh, see it? Big inflow from SPY, outflow from XLK. Okay, XLK is another it's a technology ETF. Okay, and then gives you other data there. Then we look at the chart. The charts the chart page does a lot for you. It can give you trends. It could tell you when it issued dividends. It can even compare. For example, you click this. You want to say, okay, how's it comparing against just the S&P 500? You can click it, and there's what it tells you. Okay, so it's outperforming the S&P 500. So you can look up all kind of things through that. Profile, if you want to look at that. But here's the coolest part of this. And this is why I use Yahoo Finance. You click there. Okay, it's going to tell us if I buy this fund, what stocks am I actually getting into? So if you scroll down, it's going to tell you this fund, here's where it's most heavily weighted. Apple, Microsoft, Nvidia, Amazon, Meta, Google. So you have here's basically the top. Nvidia, a lot of people are starting to deplete their positions, not deplete their positions in Nvidia, but its position grew so much of the overall asset of this holding. A lot of people kind of trimmed their positions on that. But look, you're getting into this. Tesla, Visa, Eli Lilly, Alphabet, all these things. You're getting all these stocks in this portfolio when you buy one share of this. Okay, and you only need to buy one share. So for $400, you can jump into this and learn how all this works. Now, I'm not telling you to buy this one. I'm just saying this is how you do the research. Okay, so that's about it. If you guys have any questions, I know there's only a handful of people here right now. I probably lost a lot of people when I forgot to turn on my mic. What happened is when you do the intro, you have to have your mic off, and then when it goes over to live, my mic didn't turn back on. So my apologies there, folks. But this is exactly how the first-time investor at least should approach investing. Now, if you have a 401k, you have to, especially if your company's matching anything. Like, a lot of companies will match 3, 4, 5%. That means you're automatically getting a 3 or 4 or 5% return on your money, and you didn't even do anything. So imagine if you can put your money aside into, let's say, your company's 401k or something like that. They match it. They give you a 4% return, and then you put it into something like this. Now, every year you're not going to get 20% returns. There's years where the markets go down, but it's like the housing market. My dad always said, I lived through the Great Depression. I'm never going to buy another stock in my life because I saw all these people just lose everything. And it's kind of like how people are feeling about the housing market right now. They're like, well, the housing market's got to crash. So a lot of people are just reluctant to basically do anything. They're reluctant to get in the stock market because, it's at record highs. They're reluctant to get in real estate because they're at record highs. But at some point, you kind of got to dip your toe in the water, because otherwise you're going to be left behind. So this is how the poor stay poor and the rich get richer. So basically, that's my video for today. So I apologize, I didn't have video for the first few minutes. These sessions aren't going to be long because I just want you to get it. I want you to get the fundamentals. Then at some stage, we're going to be live, and we're asking questions. I'll probably ask you questions. Why'd you pick that one, and so forth. I'd love to get to that point. So my goal here is I have no agenda. I don't want you to buy anything. I don't want you to subscribe to anything. I'm just here to help you. Same thing on the mortgage side. My name is Dan Frio. I'm actually a mortgage advisor licensed in all 50 states as well as Puerto Rico. You can check out my YouTube channel right through here. I was just on News Nation last week. But I'd love to have you as a subscriber. And if you want to learn more about real estate, this is probably the number one way to do it. You just watch my videos 5, 6, 7 minutes every day. In the morning, I'll give you basically what the economic calendars for the day, what's moving the markets, what markets are moving the best, what's real estate's doing, and everything else. And then Kyle Seagraves and myself, he's the host of Win the House You Love. He actually works with me as well. We do a live session each Wednesday. So if you guys have any questions when it comes to buying that first house or maybe first investment property or anything of that sort, we can help you there as well. So my name is Dan Frio. Check out my main website, which is the Rate Update. And this is my primary business. I'm a mortgage loan officer licensed in all 50 states as well as Puerto Rico. It's the rateupdate.com. And there it is right through there. So like I said, guys, I have no agenda here. My goal, my main purpose and goal is to help you guys understand the markets and go from being, hopefully poor to at least, filling in, making it to the middle class, maybe even higher and higher and higher. But you got to start somewhere. So thanks for watching, guys. God bless. Have a fantastic evening. And I hope to see you live tomorrow, but check out my videos. Take care. Have a great